I'm here with Michael Pennisi. He's the head of strategy at QSuper, which is Queensland's oldest and largest superannuation fund, investing about 50 billion, more than 50 billion, I think, on behalf of about 550,000 members. Michael, thank you for joining me.
Thank you, Lee.
Michael, just sort of at a high level, perhaps you can start by explaining the rationale for QSuper's investment strategy.
Sure. So we've just in recent years introduced multiple cohorts of members. And what that means is for our default members, where there's over 400,000 of those, we invest their monies over 8 different investment strategies called cohorts. And we group them by account balance and also age, which is a little bit different to what others have done in the industry. The reason we've done that is because we believe that the one size fits all can't work. And it's the traditional way that lots of pension funds have operated, and we've thought after the GFC and after having a good look at what we thought the real purpose of super or pension funds was, that there's a better way.
So really you're sort of looking at the liabilities over the long term. How does that translate into the investments that QSuper makes, the strategies that you take on, the exposures that you give your members?
Yep, sure. Probably the biggest change is when we think about what the liability is. So you're absolutely right, we're looking at asset liability matching for this particular type of product. And so we think that the traditional way again of focusing on risk being a variability in returns to risk actually being the variability in achieving a retirement outcome. Very, very different. So what that means is that when we invest for the different cohorts, we mix what's called a higher risk pool with a risk-free pool. And what that's meant is that we've looked at the different assets that support those different pools and blend them together for the different cohorts.
Okay, so I mean, in terms of looking forwards, how will your investment strategies develop?
In terms of we've been on the path of greater internationalisation, however you want to call it, Lee. We are a growing fund, and all our projections say that we're going to continue to grow. So when we think about investing, diversification is a big one. So we diversify not only by asset class, but also by country and region as well. We already invest more than 50% or around 50% of our equities and fixed interest. Our infrastructure real estate is probably a little bit skewed domestically, whereas our private equity is virtually 100% international. So I think that trend will continue, and we'll also be looking for opportunities to match again assets to liabilities. So things like infrastructure are a great mix for us.
Yes, okay. What about, in terms of when you look at value opportunities, you obviously look at the asset liability matching, as you mentioned,
Yep.
So you'll be looking at long-term opportunities like infrastructure. What other value opportunities would you typically look at, and will you be looking at more perhaps in future?
Oh, it's hard to say, to be perfectly honest. I think we look at those assets which have regulated returns, which have long-term returns, which again fit very nicely into the life cycle of those different cohorts. And for as much as we can, we would try and match the assets to each of those different cohorts. Some are closer to retirement, some are further away from retirement. And that's the way the asset liability matching works.
Okay, well you mentioned obviously the cohort strategy, and I think
Yep.
that's regarded as quite forward thinking, and QSuper receives a lot of credit for that. Can you tell me about the role that customer intelligence played within that, and what maybe other institutional investors might learn from that kind of approach?
Yeah, sure. I think we learn as much from others as anything, to be perfectly honest. Customer intelligence or data, whatever you want to call it, played an absolutely central role and continues to play a central role. What we've got out of it, we've invested pretty heavily in data. So it's really, if I put it down without using jargon, it's just about knowing our member base, knowing what drives them, and collecting the data to enable us to make better decisions. If you break it all down, that's what it is. We used and continue to use that data to refine about what we're doing. And the conversations we're having today about our membership in the pension fund are very different to what we've had in the past. So how have we specifically used it? We have a financial planning arm. So in working out the different strategies, we in fact use data from 16,000 personal interviews, obviously sanitised without divulging people's personal details, but what do our members want? What are they seeking in retirement? And also what other assets have they got? So we've taken that into all the thinking about what the asset liability matching should look like, and therefore what assets should back it and what should the investment strategies be.
And can I ask, I mean, obviously it's different from one to another, but what are your members asking for? Are there any themes, threads that you can draw from what they're actually asking you for? You talked about your international diversification, for example. Is that fitting with a wider range of your members' needs?
Yeah, the overwhelming theme that comes through is certainty. Certainty in what they're going to have in retirement. And in fact, when we spoke to the board, and really the seminal moment I think for this whole strategy came about in February 2011, and we played for the board some calls to our call centre from our members. And what the members said time and time again, how much have I got, how much do I need, and have I got enough? And what really resonated with the board, and certainly us as management, was there was fear in their voices. They really didn't know, and we think that our job is just, for those members who want to rely upon us, just make it work and deliver for them certainty.
And the only way you're going to deliver that certainty in your mind is actually by diversifying more into international markets.
Oh, it's not only, I think it's getting more tailored in our members. So at the moment we've got 8 different cohorts and investment strategies. Our long-term aspiration, which is a big aspiration, is we will have 550,000 investment strategies.
Right.
Which is quite an aspiration, but that's where we want it. It's mass financial planning. We know that our members can't go and sit opposite a financial planner, every one of them. It's just not possible. But boy, we want to get as close as possible to having a personal financial plan or blueprint for them.